everyone. Sorry for the delay. I had to start with a toilet break. I'm looking at YouTube and I'm looking at the stream. It looks like there's a 15 seconds delay, which is not too bad. I think last week there was closer to 1 minute. Hi Jamilu. Hi everyone that just joined. Okay, I'm gonna start with the introduction. Once I'm done with the introduction, I think whoever's gonna join will join. And yeah. Okay, so hi everyone. Welcome to today's live analysis session brought to you by IC Markets webinar. Okay, the whole point of these webinars is to help you guys improve in trading and grow your trading account. You guys know how this works. We're gonna have to start with a disclaimer. Just a very important disclaimer: any information shared in this webinar should not be construed as trading advice. Please take this as educational. Even if you find a setup today, please take it as educational. Please take it as us trying to show you how we got the setup. Okay, this information is not directed at any residents in any country or jurisdiction, such as distribution or use would be contrary to local law and regulations. Okay, so just be careful. Another risk warning is that trading CFDs and Forex is a very risky business, okay, especially if you are using leverage. The more leverage you use, obviously, the more risky it becomes. It doesn't matter how long you've been trading. You can be trading for 10 years, 20 years, 10 months, 10 weeks, 10 days. The risk applies to everyone. Okay, so hi Bob, hi Richard, hi, not my account, hi Min, hi, oh good afternoon, it's more like evening here in Singapore, almost evening. Okay, our agenda for today obviously is a live analysis session. We're going to go on to trading view. We're going to look at 3 pairs. I wrote 3 pairs, but sometimes we only cover 2. Okay, it depends on how many questions you guys are asking and how in-depth we want to know about certain things as well. Okay, so I will try my best to cover 3. So the 3 pairs that I like to cover is 1 cryptocurrency, 1 commodity, and 1 forex. Okay, so commodity, I always go for XAU USD because like I kind of specialize in XAU USD, so I would be able to best advise you when it comes to XAU USD. The second thing will be cryptocurrency. Let's just look at the major pairs. Let's not look at like the minor pairs. Let's not look at like Dogecoin. Let's look at like Bitcoin or Ethereum. And the last one is forex. So I don't really have a preference for forex. You guys can let me know what pair you guys want for forex, and then we can look into it. I try my best to cater to you guys. If you guys don't want cryptocurrency, let me know. We can do 2 forex instead. Okay, so hi One Dream, hi Kwabi, hi Stabiso. Okay, hi everyone that just joined. Okay, so our aim is to go look for setups, look for support and resistance, look for trend, because this will all complement each other, and then we're going to look for confluence. Confluence is how we look for our setup. Okay, so once we found all of these things, we can look for our setup, and I will tell you like my confidence level of getting in a trade, whether I myself will be getting in a trade. Usually I don't share things that I myself won't get in on. If I'm not getting on a trade, I'll let you know I'm not getting in a trade. If I am getting in on a trade, I'll let you know, because then that kind of gives you a bit more confidence on the setup and how my train of thought works. Okay, so introducing your host for those who don't already know me. My name is Cassandra. You can call me Cass. USD ZAR. Okay, USD JPY and USD ZAR by Kwabi and Jamilu. Yes, we can look at both that pair. That means we need to sacrifice the cryptocurrency. Okay, we'll just sacrifice the cryptocurrency and we'll do more forex today. So for those who don't already know me, you can call me Cass or Bob. Some of you are still calling me Bob. Okay, so I'm an external analyst and a prop trader at the award-winning research firm Everest Fortune Group and also the Forex Army. Okay, for those who don't know what Everest Fortune Group is, we're a finalist for 2019, 2020, and 2021 for the best Forex and equity research. We're a Singapore-based company, okay, and our team consists of CFA, CMT, CFTE accredited traders. So what we do here at Everest is that we do a lot of back testing and research. Okay, and the whole point of us doing all of this is to forecast where the markets are going. Okay, with this information that we have, we then advise banks, brokerages, hedge funds, financial institutions, and you guys here on this webinars. Okay, so even though I will be sharing where I think the markets are going, please do not take this as a signals group. This is not a signals group. This is not a forecasting group. Okay, other than that, Everest do create their own indicators and EAs and whatnot over at the Forex Army if you guys want to check that out. I personally, I am a prop trader. I've been trading for a few years now. For those who don't know what prop trading means, it means that I got funded by a prop firm. How you get funded is by passing their tests. Okay, so only less than 2% of people ever pass their test. I've passed multiple times already. Once you pass, you get funded. Whatever profits you make, you get a profit split. Okay, so this is very good in minimizing your risk. How I did this is by using technical analysis. Okay, so I am a technical analysis specialist. So if you guys do have questions, please ask me. Because I only have this is my second last webinar with you guys. Okay, so after today, I have one more webinar with you guys. If you guys have questions on technical analysis, you please ask today or ask next week. Okay, because after this, it won't be me presenting anymore. It will be another presenter, another speaker, and I don't know if that presenter specializes in technical analysis. I don't know if they specialize in fundamental analysis, but I personally, I specialize in technical analysis, so I will be able to better assist you when it comes to technical analysis. Hey Toyomi. Hey. Okay, so ask away. You have 2 more webinars with me. And then a new guy will be coming, or new girl, I'm not sure. Okay, anyways, oh yes, it's because I'm going on maternity leave. So first time mother here, wish me luck. Okay, so Q&A, 20 minutes to ask me anything you want. We don't need to do this 20 minutes Q&A session because I think it's very time consuming. This webinar is only 1 hour, right? I don't want to spend 1/3 of the webinar just focusing on this. Rather, we should go look at the charts. And if you guys do have questions, just ask in the chat box. So while I'm charting, I see your questions and I'll answer as I'm charting. Okay, I'll answer as I'm charting. That way we can cover more things in this, last 2 hours I have with you guys. Last 2 hours is in 1 hour today and 1 hour next week. And then I'll catch you guys when I catch you guys. Okay, so thank you from IC Markets. I am going to pull out TradingView now. Hi Chaos. Hey Fred. Thanks Fred. Okay, I'm going to pull out TradingView so that we can start our session today. Okay, I'm looking at, I have YouTube on my phone as well. And the delay today is only 10 seconds. Not too bad. Last week, I think it was very laggy. I did tweak the settings a bit to improve it, and I think it's improved. It has improved a lot. Okay. Please analyze gold. Okay, I am going to analyze gold. Actually, there's 2 charts I want to. I know I said we're going to skip Ethereum today, but I just want to quickly go through Ethereum because I did see something on Ethereum earlier this morning. Okay, so I'm just going to give my very quick analysis on Ethereum. You guys decide if you want that information on Ethereum or not, but I'm still going to share it anyways because I did spot it already. Okay, here we go. I don't know if it's my laptop, whatever it is. Every time we do YouTube, my TradingView just lags. it just lags terribly. Okay, I wanted to tell you guys I'm a bit biased for Ethereum for a buy. Okay, I'm very biased for Ethereum. Not very biased, but I'm more biased that Ethereum is a buy. Okay, so I think last week I did a webinar with you guys, and then someone pointed out there was a head and shoulder. Okay, so there is a head and shoulder. See, there's a shoulder, this is the head, this is the shoulder. Okay, the thing about Ethereum is that the thing about head and shoulder is that it needs to break the neckline for the head and shoulder to be valid. But in this case, do you see how Ethereum didn't break the neckline? Instead, it bounced. Okay, so immediately my confidence level that price is going to bounce has increased. So this is what I think is going to happen with Ethereum. Okay, there's a 70% chance of bounce. Okay, this is just my own analysis. Okay, 30% of a breakout, and the head and shoulder failed to break. This is why I became so confident of a bounce. Last week when we did this analysis, my analysis was 50%, 51% chance of a bounce, 49% chance of a breakout. Okay, like if I had to put my biasness somewhere, I felt like there was going to be a bounce, but I wasn't very sure because there was also a head and shoulder forming. This week we can see that the head and shoulder failed to break, giving me confidence that the bounce is more likely to happen. So this is my setup for Ethereum. I think price is going to bounce here and then go up. Why? Because if it wanted to break, honestly, it would have break here where the head and shoulder is. Okay, but because it failed to break, it's giving me more confidence that price is going to go up. Okay, so that's one thing. I will share with Ethereum. Okay, I'm going to get rid of Ethereum now. We're going to go to something else. This is just my 2 cents on Ethereum. Please obviously do your own analysis. Do not jump into this trade unless you truly believe in it or whatever it is. Okay, so yes. Okay, I'm going to get rid of Ethereum. Okay, well, we'll look at gold now. We'll look at gold. So before the webinar, I kind of already looked at gold a bit. I'm not sure if I told you guys last week, but I had an analysis on gold. Okay, my analysis was that, let me show you what my analysis was. Okay, no, last week I did take you guys. Last week in the Bahasa webinar, okay, so those of you who don't join the Bahasa, because obviously it's not a language everybody knows. So I think people like Tuan, people like, I can't see if Tuan is here today. Okay, Tuan, Tat Choi, Henny, if you guys are here today. Okay, last week on the IC webinar, Bahasa webinar, I called for a buy for gold. Okay, my analysis was that price is going to pull down here. Okay, which it did. And then now you enter for a buy. Okay, so for those who joined my Bahasa webinar last Wednesday, you would have caught this buy entry here at 2004. And then now you would be at like 200 pips. Okay, you would be at 200 pips of a profit. Okay, but for those who didn't join the Bahasa webinar, because obviously it's not in English, right? Let's try to look for another entry for a buy. So I am still biased that gold is a buy. Okay, let me run you through my train of thoughts of why I think gold is a buy. I'm not stuck, am I? Okay, I hope I'm not stuck because I'm looking at the YouTube on my phone and it looks like I'm stuck. But okay, I'm just gonna go on. Even if I'm stuck, I don't think I'm stuck. It's more like a lag. more like a delay. So I'm going to keep talking. When you guys receive the information that I'm trying to say, it would probably be like few seconds later, maybe 30 seconds later, or maybe 1 minute later, but whatever it is, you're still going to receive the information that I'm trying to construe. Okay, so for those who didn't join my Bahasa webinar, obviously you wouldn't be able to get in on this trade because it wasn't in English, you didn't join. It was done on Wednesday. So right now I'm going to try to look for another entry, okay, for gold. Let's try to look for another entry for gold. I'm going to go down to the smaller time frames actually. Yeah, I'm going to go down to a small time frame to see what I can find. Look, the ideal entry for gold buy was 2004. Okay, but I didn't take you guys for those webinar, so I wouldn't have been able to share it with you guys. So let me try right now to find another entry. Let me see if I can find anything at all. Okay. Okay, cool. I do see something. Okay, this is my other buy entry now. Okay, in the event gold pulls back to this area here, okay, I'm gonna have to highlight a zone. I'm sorry, I cannot pinpoint an exact number. Why? Because there's too many wickings going on. Okay, do you see all these wicks? All these wicks can be your possible entry. Okay, all these wicks can be a possible entry. So the possible entry can even go down as low as 1998, but I don't think price is going to come down there a second time. I think this area is the more highly likely area of price coming back. Hi TC, hi. Yep, I can see the lag happening because I do have you guys on my phone as well, and I'm already okay. When I said this, it was 5. Okay, I'm gonna see how long YouTube takes to draw this X here. Okay, and I'm gonna look at the timer to know exactly how many seconds delay there is. Okay, so ideally for gold, what I want to see right now is a pullback to this area. The lower you can go, the better, obviously. The lower you can go, the better. Somewhere around this area, I would want to get in on a buy entry, and then I will buy it all the way back. Okay, if I'm being very ambitious, I'll put my take profit here, like right on top of the swing high. Okay, or even more ambitious here, where this swing high is. Okay, this is one, like, if I'm being very ambitious, but the whole point is not to be too ambitious. The whole point is to win. Okay, so I'm just gonna put it here where this swing low is instead, and hopefully price is strong enough to kind of like pull back, reverse, push it all the way up to our take profit, and we're good to go. Okay, I finally see the X. Honestly, the delay is not too bad. There is a delay, it's definitely a delay, but it's not too bad. So I drew that X. I looked at my computer clock timer. It was 5:50 and now it's 5:51. So the maximum, there's probably a 1 minute delay, which is not too bad, to be honest. I think someone was telling me last week YouTube can go do their delays up to half an hour. Okay, so I'm glad I'm not at that half an hour mark. We're only at 1 minute, probably 1 minute maximum. Okay, so this will be our stop loss. I'm just going to put it slightly below this swing low. I'm hoping if it were to come down, it doesn't break this swing low. If it breaks the swing low, that means price is probably trying to make new lows. Okay, price is probably trying to make new lows already. Ideally, I don't want to see that happening. Ideally, I want price to just pull back to this area, and somewhere along this area we can get in for a buy. Okay, but if it hits our stop loss, that's totally fine. That's totally fine, because the problem is I know it's going up, right? I know gold is going up. My bias is that gold is going up. It's just the entry zone is too wide. So when I'm looking at this chart, the entry can be anywhere from here all the way to anywhere from here. Okay, so I can't possibly use this huge range. My only chance is to narrow down my range and hope my narrowed down range is the correct range. Okay, hope the narrowed down range is the correct range based on these swing highs here, based on all the support here, based on price rejecting this area 1 time, 2 times, 3 times, 4 times, and kinda like the 5th time. Okay, so I'm hoping it comes back, rejects the 6th time, rejects, do a very nice rejection for the 6th time, and then continues up. Okay, this will be the best case scenario. We would all make profit. Sorry, not we will make all profit. Again, please take this as an educational webinar, not a signals group. Okay, sorry. This will be a very nice 1 to 3 kind of trade. 1, 2, 3 kind of trade. Okay, so if you have a 1, 2, 3 kind of trade, that means with $100,000 account, right? You are risking, basically what it means is you are risking 1% to make 3%. Okay, so your maximum loss is $1,000 and your potential win is $3,000. So I think this is a very good risk to reward trade, to be honest. I think this is a very good trade because it's a 1 to 3 kind of trade. Thank you, Combo Fist. Love your name. Okay, so this is an okay trade. Remember, okay, look, I used to do webinars for you guys like earlier on when I think about a year ago. I probably started doing these webinars for you guys about a year and a half ago. And I remember in all those webinars, I will always tell you guys, your risk should be 1 to 3%, right? I always tell you guys your risk should be 1 to 3%. But actually, now that I've been trading for a while and I've been tweaking my strategy and like improving my style of trading, I honestly think that 1% is good enough. You should never, like, I find that risking more than 1% is so unnecessary, because you think about it, if you risk 1%, you make 3%, you just need like 10 of this kind of good trades and you make 30% profit, right? If you think about it. But if you're risking like 3% to make 9%, okay, obviously your returns will be higher, but your loss will be higher as well. That's like losing 3 trades if you were to take a 1% risk. So I honestly think conservatively, actually 1% is actually good enough. You don't need to like over leverage. I think 1% is a very, very good amount to trade with. Okay, so that's that with gold. We're done with Ethereum, we're done with gold. Let's see what is next. Okay, sorry Chaos, I think I might need to skip yours today because I'm just going with whoever requested first. So Jamilu requested for USD JPY and Kwabi requested for USD ZAR. Okay, so USD JPY. If I have time, I can look at your requests, which is Chaos is requesting for EUR USD. I'll try my best to fit. I have 30 minutes. If I do 10 minutes per chart, I can probably cover all. Okay, let's see if I can do that. Okay, one thing I noticed with USD JPY. Okay, one thing I noticed with USD JPY is that it is on an uptrend. Okay, it looks like it's on a very clear uptrend to me. If I pull out the trend line, I should be able to draw a very nice trend line. Yep, this is a very nice trend line. Okay, that is a very nice trend line. So I am biased that price is going up. I am biased that price is going up. Let me just highlight some important levels that I see. Okay, I do see a resistance here for sure. Okay, information that I've collected so far. Price is going up. There's a resistance up there. The support level, I don't see any. I'm trying to like pinpoint a very strong support level. If I must, then the most obvious one would be this. Okay, that is the only information I've gotten so far. Also, depending on how you want to draw your trend line, you can also draw it this way. Okay, you can also draw it this way. Okay, we'll just stick with this for now. Let's go down to the 4 hours time frame to see what information we can collect. Remember, your job as a trader is to collect information. From the information that you have collected, you'll have to make an informed decision whether you think price is going up or down. That's it. That's your only job as a trader. Collect information, make a decision. Okay, so this is the information I've collected. Let me try to see if I see any closer support or resistance. Okay, honestly, ideally, what I want to see, right, is price pulling back to this area, and this area I get in for a buy. Okay, but I don't think that's going to happen. Okay, I don't think it's going to happen because if you see structure of charts, you know that price comes here one time, it moves up. It comes here one time, it moves up. It comes here one time, it moves up. Okay, very rarely, okay, price doesn't usually test an area 2 times. Okay, if price were to test an area 2 times, you need to question why price is testing the area 2 times. Why? Because if it reaches here and it goes up, it means the momentum is strong enough to push price up. Comes here one time, the momentum is supposed to be strong enough to push price up. Comes here one time, the momentum is supposed to be strong enough to push price up. In the event that momentum is not strong enough to push price up, that means there is disruption. Okay, there is disruption. Cool, I am long in USD JPY. Yes, I am biased for long. Okay, that means that it's disruption in momentum. Okay, like if a rocket ship were to launch up, it won't suddenly turn back down. Like it won't suddenly lose momentum and lose its basically momentum unless something's wrong with the rocket ship. Something like maybe the engine's not working, maybe there's some kind of error. Okay, so if price comes back the second time, I wouldn't even want to enter anyways because it makes me question why did it even come back a second time. Okay, so I think this should be on the way to the resistance. But if this is on the way to the resistance, that means we should be looking for entry for buy, right? Okay, let me try to spot an entry for buy. Okay, I'm gonna have to call for a breakout for this. I do not like playing breakout trades. Okay, I do not like playing breakout trades, although I do know a lot of traders who make a lot of money from playing breakouts. Okay, I personally, this is just my own personal preference. Okay, again, this, the trading style is basically up to the trader. Trading is an individual game. Just because someone does it some way, you don't need to copy them. Okay, so I would like to see price breakout. Breaking out is a confirmation that the momentum is strong and the momentum is still there. When it breaks out, I want to see a pullback, a retest here. Okay, and then you can get in for a buy. This whole train of action needs to happen, okay? This entire process needs to happen. The breakout needs to happen. The pullback needs to happen. Only then can you enter for a buy, okay? Why? Why does it have to happen? You're just like, why can't I just get in for a buy now? Okay? Okay, the first thing is the breakout will confirm that momentum is still strong. Momentum is still up. Okay, in the event it doesn't break out and price turns pull back here, it just means momentum, you have lost bullish momentum. Okay, so the breakout will confirm the bullish momentum. Okay, so that's a good thing. The retest will confirm that this zone is in fact a good area to get in for your buy entry. Okay, if price were to break out, come back and retest but fail the retest, for example, if price were to break out, come back for the retest, and at the retest, instead of turning back here, it actually goes down lower. Okay, that is a failed retest, and that is telling you as a trader, do not get into this. Okay, the breakout was a fake out. Do not get into this. Okay, so once you satisfy this condition, you should be okay for a buy. Buy to where? I want to put the buy here at this highest point here, but that's being very ambitious. So we're just going to move it slightly below. The aim is ideally price should reach this swing high here. But in the event it doesn't reach, it falls short, at least our take profit is here. Okay, so take profit, buy entry. Okay, this is what I do not like. Why I don't like to play breakouts is because I wouldn't be able to find the best stop loss. Okay, so in the event price breaks out, successfully breaks out, okay? It needs to successfully break out to wherever, okay? Comes back, retest, the retest is successful. You get in for a buy, then you can put your stop loss along this area, because if it has passed the retest, it means that it will be on its way up and it's not going to turn back, it's not going to touch your stop loss, okay? Ideally, it shouldn't be touching your stop loss. Let me see what kind of risk to reward we're talking about. This looks like a 1 to 4 kind of trade. Okay, 1 to 3.7. This is a very good risk to reward trade. I love this kind of setups. Okay, I love this kind of like good risk to reward trades. Okay, yes, okay, this is the good risk reward trade. This is kind of like a 1 to 4 kind of setup. Okay, risking 1% to make 4%. Very good risk to reward. Just give me a sec. Let's pull out the indicators. I have a very strong confidence that, oh, okay, Ichimoku ain't agreeing, man. Okay, guys. Ichimoku is not agreeing with this. Okay, so whenever you find a setup, you just need to remember, like, okay, you go shopping, you see a dress that you like. Okay, so you have already chosen your dress. It's the same as trading. Okay, we have already chosen, we already found our setup that is a buy. Okay, we're gonna get in on a buy at this price. Our take profit is at this price and our stop loss. Okay, so you look at the dress again, you're just like, but I'm not very sure if this dress is right for me. Okay, so what do? You ask the people around you. You ask your mom, you ask your dad, you ask your brother, your sister, your grandma, whatever it is, for opinions on whether the dress looks good on you. Okay, so this is exactly what we're doing when we're using the indicators. We already found our setup. We just want more confidence. Okay, I just need, sometimes you just need that extra little confidence, a little bit of push to tell you, yep, go for it, go for it. Okay, so I'm pulling out the indicators. Ichimoku is not agreeing with our setup. Okay, why? Because for Ichimoku to indicate that price is going upwards, price needs to be above the cloud. That's number one. Number two, the conversion line needs to be above the baseline. Okay, so Ichimoku is literally showing bearish, bearish. Okay, so we are not going to ignore Ichimoku. We are going to keep in view. Okay, now let's pull out the other indicators. Maybe other indicators are telling us to buy. Okay, let's see what the other indicators are saying. That's like asking your grandma, your grandpa is saying, yeah, the dress looks good on you, get it. And then your grandma's like, no, I don't like the dress on you. It makes you, it doesn't suit your skin tone. Okay, for example. Okay, so let's see what the other indicators are saying. I'm pulling out RSI, I'm pulling out stochastics. I am pulling out DMI. If I see divergence, bearish divergence on either RSI, stochastics, we are out. We're out of this buy, okay? Because that is price. USD JPY could very well still be going up, but the fact is that the indicators that I'm using as confirmation is not agreeing with me. If they're not agreeing with me, then why would I go against the indicators, right? Why should I go against the indicators? Okay, DMI is showing it's a sell. Okay, but then again, okay, so DMI and Ichimoku is showing it's a sell. It's totally fine. Let's see what stochastics and RSI is saying. Okay. Honestly, I do see bearish divergence. Right? It's a very slight hidden one. Okay. Let's just double confirm. Okay, why do I see bearish divergence? Because this is making higher highs. Okay, this area is making this area is making higher lows, but this area is making lower lows. Okay, the same for stochastics. Okay, I don't feel confident about this buy anymore. I'm gonna scratch this plan. We are going to idea invalidate. Okay, we are going to either invalidate. I think I'm gonna skip on this buy for USDJPY. Okay, so it can very much still go up, but the indicators are just telling me a different story. So if the indicators are telling me a different story, I am not going to go against the indicator. I am going to trust the indicators and I'm just going to stay up. Okay, why? Nothing in trading is emotional. Okay, there is nothing in trading that is emotional. Everything we do in trading is factual. So factually, if this is what RSI, stochastics, Ichimoku, DMI is showing me, all four indicators I pulled up, all four are showing me that it's a sell. Why would I want to go against facts? Okay, why would I want to go against the data that I've collected? Okay, so for USDJPY, the charts is showing a buy, but indicators are showing a sell. So it's mixed signals. My advice is to stay out. Okay, I will stay out because, yeah, there's no point taking the risk, basically. Okay, so that's that with USDJPY. Let's see the next one that you guys requested, USD ZAR. Oh, I actually have not done USD ZAR for so long. Can't even remember what the charts. I mean, the charts will also look the same, right? The strategy is the same. You're still using. Your whole aim is still to collect information. Okay. Okay, price is moving in a triangle. You know, if I see price moving in a triangle, I immediately think of Elliott wave. Okay, usually when price is moving on a triangle on the charts, it means that on Elliott wave, it's moving on wave 2 or wave 4. So wave 2 or wave 4 is usually a pullback wave. Okay, so I'll give you an example. If to begin with, price was an uptrend, okay, if to begin with, price was an uptrend, and then a wave 2 and wave 4 forms, usually it's just a continuation of the uptrend. Usually it's just a continuation of an uptrend. Okay, but I cannot confirm because I'm not using Elliott wave to do this analysis. I can't possibly use Elliott wave to do the analysis today because Elliott wave is going to take a long time. I'm going to need at least 1.5 hours to analyze the charts if I'm going to use Elliott wave. Okay, very accurate, just very time consuming way of doing analysis. Okay, price is moving sideways. I can't really come up with analysis because, okay, if you guys know how a triangle works, okay, you know that triangle price is moving within that triangle. Once it reaches the end of the triangle, it will then decide whether it wants to break down. Okay, it will then decide whether it wants to break down or it wants to break up. Okay, in this point of time with USD ZAR, price has not decided whether it wants to do a breakout on the upside or the downside. So if price have not decided, I am not going to decide for price. Okay, I am going to instead patiently in an uptrend, don't you check for highs instead of lows for divergence? Give me a sec. If I'm not mistaken, okay, so for divergence, you can check. I'm gonna pull out the cheat sheet for divergences. Okay, I didn't make this cheat sheet. Okay, I literally typed on Google and I typed divergence cheat sheet. Okay, then I downloaded this. I actually have this on my phone. I used to have a printed and I stick it into my wall, but I don't work in an office. Oh, sorry guys. I don't work in an office anymore, so I don't want to ruin my home wall. I work from home. I don't want to stick it on my home wall. But basically, hey, where's my cheat sheet? What in the world? What happened? Okay, I'm gonna have to do that again. Okay, so just type divergence cheat sheet. Okay, so to answer your question, in an uptrend, you can also take, in an uptrend, if you're taking the bottom, okay, if you're taking the lower highs and then the lower lows here, it's called a hidden divergence. Okay, it's called the hidden divergence. So you can use this to find your hidden divergence. Okay, actually it's on a downtrend where you take the high, and on the uptrend you take the bottom. Thank you, Jen B. Okay, so if you guys want, just go and download this and have it on your phone. Because like honestly, I've been trading for so many years, right? And I myself still need to refer. Why? Because it's impossible. Like we're all humans. We all have one brain, two eyes, one nose, one mouth, two ears. Okay, we're all this. Our capability wise, I would say, like if there's something you can do, then I can do it too. If there's something, I always believe that if I can do it, anyone can do it. So I personally, even for me, I've been trading for like so many years now. I still need to refer to all these cheat sheets because there's just so many things to remember. Okay, there's so many things to remember, which actually brings me to a very funny story. I actually went to a doctor once. I told him all my symptoms, and right in front of me, he Googled my symptoms. Okay, why? And I don't even blame him because it's impossible for one human being to remember so many information, right? So I rather him Google the information and at least give me correct information than him trying to pretend like he knows and then misdiagnose me. Okay, so yeah, please refer to stuff. Don't try to like remember freehand. There's no need. There's no need for that. Life is not an exam. Okay, life, it's an open book. You can refer to all this stuff. Okay, so USDJR, I'm not gonna call anything. Instead, I just want you guys to wait for the breakout either on the top side or the bottom side. It's basically moving in a triangle. Other than that, I don't really want to give more information. I don't like trading triangles because that's me trying to predict where it's going to break out. Although I do think the breakout is going to happen on the upside. Okay, I think the breakout is going to happen on the upside because price was already moving in an uptrend to begin with. And usually when a triangle happens, it was an uptrend. It's just a continuation of the uptrend. Usually that's what it happens, but I do not want to try to attempt to predict that. Okay, so I still have 10 more minutes. I'm going to go one more. EURUSD, I think requested by, sorry, I'm looking at the chat. I'm scrolling the chat. Chaos, okay? Chaos requested for EURUSD. Let's try to look at that. Another one of this kind of charts. Okay, another one of this kind of like funky looking charts. Okay, first things first, price is moving in an uptrend. Okay, I do see price moving in an uptrend. I am a bit more biased of a buy. Okay, ideally, I would want to see price try to come back and retest this trend line because it retested it. It was respecting this trend line very nicely in the beginning, right? Okay, then it came back, respected this trend line again. Like ideally, what I want to see is like price kind of come back to retest this trend line. Somewhere in this trend line, I want to enter for a buy. Okay, I mean that's the ideal scenario. Okay, but like the chart is not going to do what you want it to do. Okay, so we are going to try to forecast what we think the chart is going to do. I don't love the structure of these charts, man. I really do not like the structure of these charts. Okay, let me try to go to a smaller time frame. To see what I can find, if I can even find an entry. Look, I can know that price is going up or down, but I always tell you guys, like I've been repeating this same phrase so many times, the difference between an amateur trader and a professional and a very good trader is the trader's ability to find the entry. Look, two people can come on the charts and two people will say, oh, price is going up. Okay, cool. You know price is going up. That means you want to get in for buy, right? But where do you get in for the buy? Where is the entry? Okay, your entry, without an entry, you don't have a trade. Without a stop loss, you don't have a trade. Without a take profit, you don't have a trade. You need these three elements to get in on a trade. You don't have any one of this is missing, you don't have a setup, you don't have a trade. Okay, right now, I know price is going up. I don't know if I can find an entry. Okay, I don't know if I will be able to narrow down an entry. Okay, but I will try. I will try to narrow down an entry. Okay, why am I having a hard time narrowing down entry? Because the structure of the charts is so choppy. Look at this. This is like, what is this? So choppy, right? It's so moving sideways, not really giving me much to work with. Okay, if I must decide on an entry, I would say this is my best chance of an entry. Okay, I'll explain why. It's very choppy, it cuts through so many things, it's like really horrible looking. Look, it cuts through this candle, it cuts through this candle, it cuts through this, it cuts through structure 5 times. Okay, this is not going to be a very good entry, but this is the closest thing that I can find. Sometimes the charts it's just choppy and you like, it's either you skip this chart entirely or you just force something out of it. Okay, so if I have to force something out of this will be the point that I choose, and I'll show you why I chose this point. Price came here, reversed, rejected, came here, rejected, came here, rejected, came here, kind of rejected a bit, and then it finally broke out. But after it broke out, it still came back to retest it, and then it broke it again. So then this area isn't that great. Okay, came here, rejected, turned back. It broke out again, broke out again. Okay, this area came back to retest and then turn back. Okay, so this buy entry this area where I put the buy entry, that's the most area, that is the part where price rejected the most in this entire structure. Okay, in this entire choppy sideways market structure, this is where price rejected the most, and therefore that is where I expect price to reject again. The chat is not clear. Can you make the WhatsApp group? I don't have a WhatsApp group, but I have a Telegram group that you guys can join. Okay, I'm gonna leave this here. Okay, my Telegram is okay, you can find me there. You can discuss about trading. Please take note, I'm very pregnant, so I won't be replying very often, but when I'm not suffering so much from pregnancy fatigue, I will be replying quite a bit more. These days, I do see your messages, I just don't reply them because I'm just very, very fatigued. But yes, you can try to look for me here. Okay, so anyways, I don't love this entry, honestly. I think this is a super weak entry. Okay, if I have to do analysis, okay, I would say I'm like 80% confident price is going up, okay? But 50% confident of the entry. Okay, it's really not the best entry. It's a very choppy entry. Okay, it's a very like choppy entry. I don't love it. Okay, so if I really must force something out of this, this will be my setup. This will be my buy. This will be my take profit. This will be my stop loss. Okay, or this will be my stop loss just below the swing low, because I don't expect price to break this trend line. Okay, I expect price to continue respecting this trend line. Let's see what else. Okay, it's going sideways. Ichimoku's not giving us accurate information.